This is going to be a 5-minute video. I'm going to be uploading it to YouTube because I want everybody to see this and to understand the concept that I'm going to be talking about here. As you guys can see by the title, it is called Where is GBP JPY Going? And also I'm going to be talking about structure. Obviously, it wouldn't be an aerial FX video without structure. So let's get into it. On the weekly time frame, what do we see? Well, to be honest, there isn't much. What you can see is that we did trade above, or not above, into this last up close candle here. And we do have relatively equal lows. Now this is a weekly time frame, so this will take forever to play out. So it could be years before we know if I'm right or not. But we do have a lot of liquidity here. This was an area of quote unquote support that got taken out with this liquidity here. And now this was the last up move before the leg down right here that created the relatively equal lows. So I'm going to take this and extend it out. So now we have our structure, okay? And we'll go down to the daily. I actually marked this up for our members a while ago. I'm kind of bothered by the fact that I can't remember which video it is, but I pulled my chart up and it literally played out to the T. I expected a retracement into here because we did create these equal highs right here, right? So we created these relatively equal highs here, and I expected a retracement into here to head up and mitigate this candle here. I did have this candle marked off, and there are a couple reasons why. So what you guys can see is that this is right here. This was the last low that produced a higher high. So I'm going to mark it up, and I'm doing this quickly because again, it's a short video. So here's a high, here's a retracement that traded into a down close candle. Here's a high, here's a low. Here's a high, here's a low, here's a high. Now the two perspectives that I had on this was that we didn't break structure and that we were going to continue up and create a higher high because the body did not close below this. It was just a wick. So that was a run on liquidity. However, I saw that we pushed up and did not create a higher high relative to this high. So if we had created a higher high relative to this high here, what would that mean? That would mean that we got a counter trend BOS. This is the counter trend here. You guys can clearly see that. Counter trend, boom, 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 boom. Right? If we had gotten a break above, I would expect a pullback to go long, but that's not what happened. We didn't get a break above, but we did create equal highs. So the fact that we created equal highs told me that I wanted to see price maybe attack here. Okay. Now, the only problem with that is that, again, do I anticipate price? If I want to see price attack this, it needs to trade above, which means it would be bullish again. But that's not what happened. Right? We, like I said, pushed down, didn't close below here, but we also pushed up and didn't close above this. So the fact that we wicked below, right, on the daily, but didn't close above tells me that we don't have a ton of bullish intent. Moreover, what you can see is that on the 4-hour, this was actually a break of structure because the body did close below this wick here. Also, what do we have? We have relatively equal lows. It did run this out by a wick or by a pipette or so, but we never traded back above here. So that put us in a predicament. And now my prediction was this. I predicted that price would trade down into here. This is the origin of the move that created the relatively equal highs we have up here. I'm going to adjust this so you can see here the equal highs right here. This was before all this price action played out. So we have equal highs, and I'm going to get rid of this because this is the weekly up close. So I anticipated price coming down to retrace into here and push up. And from this level, it was going to do one of two things. It was going to respect and create a higher high relative to this, because here's the 4-hour structure, and here's a message or the point I want to get across in this video. You can see we had this last, within this leg, here's the last low. It produced a higher high. We break it here. right? Lower high, lower low, lower high, lower low. Now, I did expect a reaction off of this level, right? Here, but will I be buying it up? No, because we are still bearish, right? Until we break above here. This is the last high that produced a lower low, right? We never traded above it. So I see people look at this and say that we traded into the origin. Now I want to be buying it somewhere in here, like within this leg, to create a higher high. But that's not what's happening. If you look at the structure and ignore all of this choppiness, here's the last low or the last high that produced a lower low. Until we trade above it, we're bearish. And once we trade below it, we have a new leg. We never trade above it, right? And now here's the thing. There is consolidative price action here. We had these equal highs, right? All these equal highs, and price was either going to trade above them, in which case this would be a BOS because we would be breaking above the most recent high that produced a low. And in that case, I would anticipate a retracement into here. So, but that's not what happened. And the point I'm trying to get across is that the structure is important, right? When you trade into here, yes, this is the origin of the move that created equal highs, but your structure is still bearish. And regardless of all the choppiness that happens from, you know, this high to this low, until we trade above it, we're bearish. So just because you see a reaction off of a down closed candle that swept liquidity doesn't mean much because the structure is still bearish. If this had given us enough fuel to break structure, again, what I would do is wait for the BOS, which would occur after we trade above this. Then I'd look for a pullback to go long because it would be confirmed. But people are going to try to buy this up because they saw the reaction, but the structure is still bearish. And if you look, this is the level I had marked off. We had equal highs, but I didn't anticipate price breaching them because we are still in a downtrend, which is indicated by these pink dots. We trade above and what happens? So we trade up and then this is low, high, low, high. So we get a leg up into here and then we get a BOS. And now we are confirmed bearish on pretty much every time frame because this, again, don't get confused by this impulsive move. It's not lower high, lower low, relatively equal high, higher low, and then expecting to buy up. This is not a higher low until you break above the most recent structure point in this downtrend, which is here. So don't let this trick fool, or don't let this move fool you. Follow the structure. High that made the low. Look for sells. What happens? We chop around, but then we get a strong push. And this push had its origin here. So I anticipate price reacting here. If you guys want to look, you could pull a fib on this and target the negative 27.2 if you'd like. Again, reacting off the 78.6, an idea I talked about in my YouTube video yesterday. So if you want to, now that we have confirmed the BOS with the close below this level here, you could take a trade off of probably 15225 right here and take it at least into this nice 1 to 4. So this is my outlook on GBP JPY, at least short term. I didn't do an analysis, you know, going all the way down into what's in here. But what I'm trying to show you guys is that following structure is more important than following just the smart money concepts of like sell to buys and buy to sells or sponsor candles or whatever you want to call them. ICT terms, doesn't matter. Here's an ICT term here that swept liquidity. What happens? We respect the structure. And even though we react off of it, don't expect it to go long because at the end of the day, what were we doing? Miniature uptrend, higher high, higher low, higher high, higher low, higher high, break below, lower high, lower low, lower high, lower low. Now this is our trading range. And even though we had a really nice sell to buy candle that pushed us up to give us that retracement, don't expect this to hold and push us higher because the structure is still bearish. I've seen a lot of people try to trade this. They'll think it's like a forming or potential W where you get that reversal and then break above like that. So people might be anticipating, since it reacted so strongly off of this sell to buy, that we're going to push up like this and make a W, which is here, right? W, but that's not usually what happens. So I wanted to talk about that with you guys. I hope you guys enjoyed it. And as always, if you like it, please share it. And if you didn't, go ahead and leave a dislike. Doesn't matter. I'm just giving this out because this is what has helped me trade. So thank you guys, and we'll speak to you all in the next video. Bye.